took a loss on the pound Australian dollar, and this is just a market breakdown of my trade. I didn't do anything wrong. It was a perfect trade. You know, these patterns aren't accurate. They get 60% accuracy on my end, so it is what it is. But here's essentially my thought process. So this is an ascending channel, right? I wanted you to see it clearly off the chart. So this is an ascending channel. Price is trapped within this rising channel, right? And essentially what you're looking for is a buy opportunity once we've touched the resistance of this channel, and then to add a position once it's broken the channel. And then the take profit would be at these lows, which are in line with where the ascending channel started. So now let's go to the charts to see what happens. Wait, in fact, before we go there, I want to show you also another pattern. It's quite difficult to find online, and it's called the three rising valleys. So you'll see why I'm talking about it just now. So the three rising valleys is basically support and resistance bullish pattern, and essentially that price does three jumps before it pushes up in a bullish move. So there's the first push up one, that's the first valley. Price pulls back, jumps up, second valley, and then you enter on the third pullback, and then price jumps up, and then the bullish run continues. You'll see in a minute just why that's important. So now let's go to the chart so I show you what happened. So here we are. So this is the pound Australian dollar. And so what I had seen was that price was trapped within this channel, like in the picture I've just shown you of the ascending channel. And so what I was looking for was a sell here, right? If I sold here, then I was targeting at least this area here, at least these lows, as just a first target. But essentially, I was expecting that price could continue going down and then down to where it all began. So there were three targets on my radar. And here's where I was looking for the sell, like an ascending channel. So I placed the trade, got stopped out, didn't jump back in because there was clearly a bullish move up. So when I got stopped out, it was this candle here, which was breaching the resistance. So I automatically knew there was no way it was going to turn around. So, but I did get some hunch that this was going to go bullish because I saw a three rising valleys pattern yesterday and I ignored it. So essentially, this is the three rising valleys. This was the first rise, the second rise, and then the third rise. Now I ignored it not because I thought I was correct, because you never want to be correct. You want to just follow your strategy. But I ignored it because we were in a channel. Essentially, I saw 1, 2, 3, 4, and I was entering on the fifth rise. So we were way past the three rising valleys, and we're now within this rising channel, which, like I showed you in the picture, price breaks out to the downside after it's been in a rising channel. So essentially, it was a loss. Wouldn't have done anything different. Applied my strategy the way I know best. It happens. That's just it. It's important to review, even on a Friday, to review your losses and your wins, not just your wins, but also your losses, because at the end of the day, it didn't work out here. But like in the picture I showed you, that was a real chart. It worked on that pair and that time. So it happens sometimes they don't work, sometimes they work. You just have to capitalize the times that they do work.